Hi, today we discuss about business finance. Business finance is that business activity which is concerned with the acquisitions and conversions of capital funds in meeting financial needs and overall objectives of business enterprises. So, importance of financial statements to external users. Now we discuss about this. What is external users? So, in the presence of globalizations, financial statements have become the standard measurement in judging a company's performance. Financial statements are an overall impression of the company which shows profitability, efficient utilizations of assets, settlements of understanding debts, management of equity and liquidity positions to make economic and business decisions by both internal and externals. The analysis of financial statements is the application of financial activities and additional facts of the businesses. The examinations of historical presents and possible results and monetary situations to make investing and financing and commercial decisions. So, external decisions makers of an organization are determined as potential shareholders, clients, creditors, banks, and tax authorities who need a financial record to give decisions about investments, approval of loan application, acquisitions of products, and compliance with applicable tax laws and regulations. So, business between agency theory and existing accountancy practices. Now we discuss about this. So the agency theories is a mixture of the relationship between principals and agents. It occurs when the principal and the agents create a delegations. The agency theory argues that in the modern corporations where the share ownership is widely held, materials action differed from these required to maximize the shareholders' return. In agency theory terms, the owners are principals and the managers are agents, and there is a agency loss, which is the extent to which returns to the residentials claimants, the owners, so fall below what they would be if the principals and the owners exercised direct control of the corporations. The long-term strategies for agencies theory include the principles of company, business, and franchise, etc. So, what is audit theory? Now we discuss about these theories of demand for audit. Audit refers to an examination of the financial report of a firm by an independent entity. The separations of business ownerships and management in modern society has created a need for accountability, causing the role of audit to change as the needs to shareholders change. Audit itself caters a true relationships of accountability, independent form of their part for the firm to provide a true and fair view of the financial reports of an organization, whereas the value relevance refers to the auditor's ability and responsibility to provide reasonable assurance that financial statements are free of material misstatement, either due to fraud or error or both. Now we discuss about what is management accounting best practices. Cost allocation. So cost allocation is the process of identifying and assessing the cost of servicing necessary for the operations of a business or other types of entity. Unlike a cost rating, the allocation is less concerned with the actual amount of the cost and the most concerned with allocating or assigning the cost to the correct unit within the organizations. From this perspective, cost cost allocation can be seen as a tool that helps track all costs associated with the ongoing operations more efficiently, since cost is associated with specific departments or groups of departments within the organizations. A simple example of the cost allocations would be the wages or salaries of an employee assigned to work in a specific department. So now we discuss about the harmonizations of accounting standard. So many authors have put together different definitions for accounting harmonizations in various ways. It would seem not an easy word to define, and neither the European Commission nor open organ of the Commission have explicitly defined the concept of accounting harmonizations. Some have even complicated the whole concept by attempting to subtitle harmonizations with standardizations as if to mean that the process is the same rather than making it more compatible in practice. Harmonizations of accounting standard tends to mean the process of increasing the compatibility of accounting practices by setting bounds for the degree of variations. This can be accepted to the most suitable definitions of the concept. Now we discuss about the what is the importance of the audit independence for stakeholders. The importance of audit independence can be categorized into four reasons. Firstly, audit independence can hold the public confidence and avoid interest conflicts. Secondly, audit independence can help auditors to provide high quality finance reports and avoid scandals like Enon bombs. Thirdly, the development of the non-audit services make it more difficult but more important to maintain audit independence. Lastly, audit independence can improve the quality of audit and it can assist managers to make strategy formulations. So, stakeholders make economic decisions by taking advantages of financial reports, whether these reports are related to reliable or questions. Audit can help to solve this problem. And now we discuss about the business finance is that business activity which is concerned with the acquisitions and conservation of capital funds in meeting financial needs and overall objective business enterprises. So purposes of cost allocations, cost allocations is assigning the cost allocations are assigning the overhead costs. So cost allocations assigning of common costs to several cost objectives. So for examples, a company might allocate or assign the cost of an expensive computer systems to the three main areas of the companies that use the systems. A company with only one electric meter might allocate the electricity bill to several departments in the company. Cost allocation implies that the assigning cost of the somewhat arbitrary. Some people describe the allocation as the spreading of cost. Because of the arbitrary nature of the cost allocation, efforts have been made over the years to improve the base for cost allocations. So now we discuss about the methods of allocating overhead cost. So overhead cost is an ongoing expenses of operating a business and is usually used to group expenses that are necessary to the continued functioning of the business but cannot be immediately associated with the products services being offered, as in the cost do not directly generate profits. So overhead cost includes direct, indirect products cost or direct cost of responsibility center. Indirect product cost is known as manufacturing overhead, whereas indirect cost of the responsibility center is known as non-manufacturing cost. So manufacturing overhead is those manufacturing costs that are incurred to a variety of products. It cannot be traced to individual products like depreciations of insurance of manufacturing equipments, cost of occupying, managing and maintaining a product facility. Now we discuss about the critical evaluation of IAS 37, the International Accounting Standard Committee. IASE issued IAS 37. So provisions, contingent liabilities and contingent assets in September 1998 in replaced part of IAS 10. Contingencies has become operate for annual financial systems and statements covering period beginning on after 1st July 1999. The objective of these standards is to ensure that appropriate recognitions criteria and measurements based are applied to provisions contingent liabilities